Good afternoon, traders. This is Christian from Hertz Market Trade Group, and today is August 30th, Tuesday. So we've got several days left of the week before we hit a holiday weekend, which we'll have Monday off. So kind of just getting through the rest of this month. Clearly, volatility showing up again, which I kind of thought was a good chance. Let me just lower my volume over here. Get rid of this. There we go. So theme of the day, I would say no hiding places, right? We'll talk about what I mean by that. Risk disclaimer in front of you. Everything that we're going through is for information purpose only, not giving out any advice or recommendations. This video should be a little bit shorter just because I usually make the videos a little bit shorter when there's really not as many opportunities that we're seeing right now in the market. I think this is kind of a wait and see at this point. We know that basically towards the end of last week's Friday specifically, the price action jumped back below the short-term moving averages. For me and my time frame, I'm more of a swing trader that is a kind of hands-off in terms of taking any major risk. Day trading, those types of things are okay in this market. Doing a little bit more shorting, or having more of a larger hedge on, that is really what's, in my opinion, what's necessary when you lose those short-term moving averages. And the no hiding places theme is that what was previously strong, energy, some of the materials, some of the mining space, those areas looked pretty good. Other commodity places too, as well as the agriculture names were holding up pretty well. Well, those got hit pretty hard today, and there was one chart that I can kind of show you to kind of start off with that, and then we'll do a quick index review. All right, so this is kind of what's been getting a lot of attention over the last week, and it is so this contract, right, JXY1, probably something that you never heard of before, but this is the where is it here? European Energy Exchange. So basically like power futures, right? The electricity, right? So this has been getting just a ton of attention about, the prices of electricity going through the roof. Haha, no pun intended. But it basically looked basically looked like a hockey stick pattern, right? Just completely up and to the right. This got all the way up to 1,000 in terms of energy costs. Well, today, Germany announced that they're actually going to be doing something about it. Something that was also kind of lost in the news, which I heard about, I think it was yesterday morning, was that they are stockpiling natural gas supplies too, right? So this is kind of complicated stuff. It's not something that I track every day, but every once in a while something like this kind of gets into the news and people start to look at what's going on with a particular commodity or something like this, electricity. So you could see, I mean, it's still very elevated. It's at 610, which is higher than the normal would be. Here's like the 50-day moving averages down here, but this thing kind of topped out at 1,000, right? So it is down 40% from the highs. Again, still up probably a huge clip from where this thing was. And I'm just looking at a 1-year chart. Here's what a 5-year chart looks like. So the prices of electricity, even though they've come down 40% from the highs, they're still very elevated. But what basically happened is once you see that type of move, and so again, there's your big move the last couple of days, right? You start to see, I think this contributed to what happened in oil today. So that's where I'm going with this. Oil looked very good. In fact, I spent a lot of my video yesterday talking about how strong energy was and so forth. But this is just how this market's been this year. It's very, very tricky, right? It's all about, if something doesn't go the right way, not letting your losers run, and trying to make your winners into bigger, larger winners than you have losers. So this is very tricky. Right now, we did hit resistance, even though this was the highest level in crude that it had hit this month. It still stalled at the 50-day moving average. Try to go a little bit higher, and this is a big move. It's down 5%. So my opinion, so all of these energy names down, right? And you could see, nat gas is still at a very high level, even though it was down 3%, but your energy names are going to get hit. So my opinion is, and I don't specialize in trading energy stocks, but it's going to be very much when you are positioning in them, and in my opinion, you have to watch what the underlying commodity is, right? With anything, if you're playing in the commodities, just like if you're playing the agriculture names. One of the things that we talked about, with some of the agriculture names going up a lot, was they weren't really accompanied by the move in agriculture futures. Now, wheat came to life a little bit, but clearly, like the last time that we saw these moves, right, CF Industries was doing something, was basically back in here. So it seems, and here's the two peaks, right? So it seemed a little bit unwarranted what was going on in agriculture compared to, wheat, compared to corn, and compared to some of the other ones too. So, again, a little move off the lows, but not even nearly close. So it looked to me like a little bit suspect, right? I did position in Bungie yesterday, which I got stopped out of today. In fact, I got stopped out of a lot of trades, from yesterday. So that's just kind of the situation that we're in right now. You can't really get complacent, even if, the commodity names have been acting well, but probably, energy and a couple of these other areas, they're pretty overcrowded at this point. There's a lot of traders that have been, gotten into these energy names. And, if you looked at the 20-day new high list yesterday, the majority, that was it, right? It was, 90% of what was on the 20-day new high list, something that I comb over on almost a daily basis. The 20-day new high list was just riddled with energy names. So that's what can basically happen, especially and kind of a longer term view about the energy spaces. They're most likely, they're gonna come up with workarounds, right, for some of this energy situation. They're gonna, but some of those solutions will take time, right? So in any event, that's my quick opinion on this. I got out of, I always show my trade blotter, right? So this is basically what I did today. I was able to take a quick target of this CCJ, which I left on from yesterday, and I dumped the rest of it. Whoops. And it actually did quite well today. Look at the dip was bought today. So impressive to see this. So again, nuclear still in the conversation. Look at the recovery from the lows, hit 28.2 and bounced all the way back to basically the high. So unfortunately for me, I took a I took a target right in the first 5 minutes of the day, and then I got rid of it, about 20 minutes later, once it kind of got down to my not to my cost basis, but to my last add, because I did add into strength a bit yesterday. But SLB, and it's tough to see this very quickly go below your cost basis. This was a name that I hit 2 targets in yesterday, right? So again, making sure that you take targets in these things kind of helps a little bit. I took, even if they're not big targets, because right now just the day-to-day moves are, they could be quite vicious if you're positioned on the long side of this. And I even have hedges on too. So, SQQQ, this was one of my questions going into the day, by the way, was, we saw that all the energy and commodity names were down pre-market. And I said, okay, well, what is today going to be? Is it going to be a rotation into, some of tech, maybe, some of consumer discretionary? And we didn't see the rotation into any of these areas. In fact, we saw just more liquidation. So let's go over the indices. But again, here's how I traded things. I'll go over 1 or 2 single name charts in just a second too. But I thought, yeah, if you're a regular viewer of my video, that I basically did not like yesterday's price action in single stocks and in the indices. So I thought that we could see further downside. So now we have broken the 50-day moving average, right? In the S&P, we do have, we only have 1 more day, by the way, of August. So normally I would say, hey, we're down into some support, but we'll have 1 more day of August, and then we're gonna have a new value area, which is the shape of this over here. Still developing, but that's going to be the shape of it. We also have another downside VPOC. We got very close to this, right? This is down at 39.59. So if there's some more, month-end type selling, maybe that gets taken out, and maybe, possibly we see a little bit of stabilization around there. switching. So that's what I see for now. Watch 39.59, but ultimately, right, we're now back. We've lost everything here. We've stalled. And again, I chuckle because it's just crazy how quickly this could happen. This was at 817 where we got rejected at the 200-day moving average. Now, normally, in a normal market, what you would see is, okay, a little bit of back and filling, some sideways price action. That was when the index was around like 4,300, right? And we're all the way down. We lost 300 points plus, right? So, we lost the 20-day moving average. Of course, the first thing we lost was the 5-day moving average, and we also lost the 50-day moving average. So this has been, this went down as fast as it went up, right? And faster probably, because it took us, right? This was 727. So we really started the month in here, right? So we had a nice, first half of the month. And again, this always goes back to how I view the first half and the second half of the month. Now, this was much more drastic, but I view the first half of the month is usually a little bit better, right? Because there's new money being put to work in the beginning of the month. But look at the difference between the first half and the second half. All right, so straight down. So that's what I'm looking at 39.54 for the S&P, as well as 39.58. So that's what I'm watching to the downside. NASDAQ, a little bit different looking, right? This did breach everything as well. Broke the 50-day. So similarly broke the 50-day moving average. This is a little bit deeper, right? This broke into the August value area. So notice I've got a trend line in here, but just keep in mind with trend lines being drawn, I drew this, I think, on Friday. They are arbitrary, right? You could draw a trend line wherever you want, right? So I view volume at price, a little bit more weighting in my analysis, but we did take out one of these, right? And we held it, right? So virgin point of control, an area of high volume that we previously have not revisited. Well, we revisited it today. We took it out, and you could see, look at the stabilization here and bounce. So I don't know if this is going to hold, but this 12,300 level would be important to me, or in the Qs, it would be the 300 level, right? Pretty sure that's the same. Yeah, notice the same thing. Yeah, so the 300 level. So that's what needs to hold here. And if not, then I would say we're failing again at support. So but bottom line is, below all these moving averages is not a good sign. I wait to really and again, that's why these videos are a little bit shorter, because I really I wait for long setups for price to get back above the 20 and the 5-period moving average. And again, the 50 will have to be overtaken too. So this is a waiting game for me. I like I said, I try to day trade a little bit. I position lightly. One of the names that I liked was GFS today. Was up 3.5%. Still, the chart is kind of it's sideways. It's building a little bit, but overall, when you look at the group, right, of SMH, it's showing some really nice relative strength. This was down 1.1% today, and Global Foundries was up 3.5%. So pretty nice there. There wasn't really much else that kind of held its own. BJ Wholesale looked pretty good today after, again, was positive for the day. That's relative strength. I like this WWE, right? This came in and filled this gap today, right? And is at the 50-day move, just closed right at the 50-day moving average. But this would be a nice spot for, for a possible bounce in here. All right, guys. So that's it. I think overall, being a bit, being defensive in here, right? I'm back to basically almost 100% cash in my trading account at this point. I just have a few small positions left on, but, I practice, I really try to practice what I preach, right? And in this market, we've talked about it over and over in 2022, that you've had to be a risk manager, right? This year, right? The more that you can own up to trades, right? I mean, when you look at four different trades that you could basically have when you start, you're either going to have a small winner, a big winner, a small loser, right? Or a big loser, right? You just don't, the The thing that can really hurt you is the last one, the big losers, right? And this year I've had, a lot of little losers, right? And the goal is not to have any of the, not to make those little losers and not be stubborn and turn those little losers into big losers. So again, it can be very frustrating, the way that this market can kind of go from one day, to the next. But you've got to conserve your, not only your buying power, but you got to conserve your mental confidence right now, and not get too shaken by this market, and and realize, this is one of the things that I had talked about too in the room, right? Trading with signals, realizing that the NYSE and NASI both have, which I go over every couple of days, those both have had bear market crossover since the middle of last week, right? And that's playing out, right? So that's a really good signal to kind of give you a sense of whether or not you should be taking risk, whether the wind's at your back or the wind's in your face, right? And then the other thing that I talk about is, where are we? Right. Well, we're just going to be starting September. There's a lot more notes or a lot more people talking about this, from when I started talking about it a couple of weeks back, is that September is a tough period. Right. And, we may see there's going to be a lot of things that go on in September. We're going to get another CPI report, which is right in the middle of the month. Then the next Fed meeting is the 21st. Right. So, I mean, I kind of think, my hunch, and again, I'm not using any more than just saying it's a hunch, because I will let the price action and some of the indicators confirm my hunch, and we're not there yet. But but my hunch is that all these Fed speakers and so forth are kind of killing the price action. They're trying to make things pretty negative. They want to see that middle of the month CPI report come in much less than expected. If that happens, then we'll see what happens on the September 21st. Maybe we get a different Powell on the 21st of September if the numbers really start to kind of come down decently. So that would kind of line up a little bit with this with the seasonality chart, which basically says in a midterm election year that October, November, and December are pretty good months. Again, the disclaimer with this is that I'm not going to just basically be trading the seasonality chart. I will be waiting for things like the NYSE, the NASI, bull crossovers, the price action in the indices to get back over those short-term moving averages that I just mentioned. So that's the thing. And bottom line is patience right now, right? And if you can, if we can get through September, and not have it be a disaster in terms of how you're trading and your P&L, then we might be on to greener pastures, provided that we get some nice signals to go along with that. All right, guys, thanks for watching. Have a great night. See you tomorrow.